And welcome back to another weekly setups. Uh, Last week was a very long one. I didn't manage to take any trade personally, and all the trades technically played out without having the entry signal, which is just crazy. But we have good pairs this week, or we have almost no pair this week. But let me show you what we have this week. So if you look at my chart right now, we have GBPCHF. That's technically the only pair for the week. Let me show you the pairs of last week. So last week, what we are looking to see were retracements. If you look at me, if you look at this, I posted this trade 5 days ago. Most of the pairs seems to have already reached targets, and we missed a total of 1:10 risk to reward ratio. What we are looking for on this trade was a retracement to this area to sell. You can look at here, the direction was correct, but the retracement didn't happen. Same thing here, direction correct, no retracement, no retracement, no retracement here, and no retracement here. So I mean the pairs played out to perfection, but we didn't get any entry because of no retracement. Markets were too fast. So let me show you the pairs we have this week. By the way, Precious Ume and Abdul Mohammed wanted me to explain how to draw area of interest. I'll cover that at the ending of the video. So Precious Ume and Abdul, please watch to the end so that I'll cover how to draw area of interest correctly. So let's get into the pair for this week. So we have GBPCHF, which is technically the only pair for the week, and market structure is actually bearish. If you look closely, let's check the weekly first. Weekly time frame, you can see that market is bearish. We have lower low, lower high. Price had a retracement back to the structure points, had an engulfing, and it still is dropping. Daily time frame right here, you can see that this is a daily area of interest because we have 1 tap, 2 tap, and 3 tap from area of interest. What I'll simply be looking for on this trade is a break and retest under this area of interest to take the trade to the downside. Let me show you how 4-hour looks. As you can see, 4-hour has a very strong support on this area. So as soon as we break under this area and retest, as you can see, my alert is there. There's round psychological level. EMA is above, holding price as resistance. I will not be interested in taking the trade short this week. So, but we still have other pairs I'll show you. Just stick around. Let's get into those other pairs. So the second pairs, as you can see, all these pairs that I'm calling right now, apart from GBPCHF, every other pairs just have issues. It's not fully the set and forget. It's either something is just wrong, but it just looks good to me, good enough that I'm willing to still take for this week. So let me show you exactly what I'm looking for this week. As you can see on the daily time frame, on this pair, we have this strong support area, right? Support, anytime we are above, we are rejecting up, we are below, we are rejecting down. So now we are above this area, right? But if you really read market structure, if you watch this video, I explain everything. You really read market structure, you will see that this price action right here is actually bearish. But I'm still willing to look for buys on this market just because, first of all, we are already buying. Second, we had a retracement back to the same area, and we had a daily engulfing candle, engulfing 2 days of price action, right? So I still think that the buys will still hold, right? Even if this area, now you understand why this pair is not part of the pairs for the week, because weekly time frame is bullish, right? Now daily time frame is now bearish. As you can see, daily time frame is bearish, but I'm still looking for buys just because it's above area of interest, right? And 4-hour time frame is bullish. So we don't really have that 2 time frame in sync. That's why I'm not like very much interested in this trade. But let me show you how I'll play this market. So we already have this break, right, on the 4-hour time frame. As soon as we get a retracement back into this area, I'll jump down to the 1-hour time frame and find engulfings that I see there, and then put my stop loss below this low, below here, so that as soon as if price decides to break under, it means that the direction of the trade has changed totally. You get, then you will see that price will now be EMA will now be above, now holding it at resistance. You might now start looking at the daily for this maybe no, not daily, 4-hour time frame, right, for maybe a head and shoulder pattern to continue selling, But right now market is still bullish, and I'll still be looking for buys on Euro GBP this week. Other pairs again, we have GBP AUD, right? What I will simply be looking for on this trade is a break and retest above. Let me explain. You can see this time frame, the daily time frame has 1, 2, 3, 4 taps from area of interest, and now we are above area of interest, right? 4-hour time frame, we are basically almost like consolidating here, but you can tell that this is the low, this is the high, still making this market bullish. So technically we have that time frame in sync, but if you look at the daily well, it's not that clean, right? So how we'll be playing this market is going to be very simple. If you look right here, you can see that we have a little bit of minor support and resistance area here. You can see that price has come here multiple times, rejected down, came here, rejected down, rejected down. So I'll just simply be waiting for a break above that area and a retest to continue buying. Anything outside of that, if you look at the 1-hour time frame, you see that there's no even clean market structure there. I don't know what to even do on this market except that break and retest. So that's how I'll be playing this market. CAD JPY. So now I'm willing to pay for this week. Now, if you look on the daily time frame, you can see that this daily time frame is actually bullish, right? But we have a minor support and resistance area here. We have 1 tap, 2, and 3 taps from area of interest. I know I supposed to extend this area of interest all the way down there, but we already have 3 taps here, and this is the current price action that we're ready to play. This is what I'll be paying attention to again this week. So even if price is actually bullish, you can see that it's under area of interest that's had that retracement, a doji, and an engulfing on the daily time frame. So there's still selling pressure on this market. If I go to the 4-hour time frame, you can see that 4-hour time frame is going to have a much more cleaner area of interest. So technically, this 4-hour time frame is actually, this area of interest is actually a 4-hour time frame area of interest. If you know the sell and forget strategy very well, you know that you only draw area of interest on the daily and on the weekly. But now that we're using 4-hour area of interest, that's why you know that this is not one of the top pairs for the week. The only top pair for the week is GBPCHF. So you can see on the 4-hour time frame, we had this break and a retest, and price has formed almost like 3 dojis here and 4, and even had a liquidation grab or something, right? Now we went down and price has come up. Usually we are likely to fill this week, so we'll just be looking for entries on this time frame. Now there's still other pairs like NZD, USD, and Euro JPY. I don't really, this NZD, USD, and Euro GBPCHF is not even sell and forget strategy. In fact, it's just experience on this. I'm just making it clear, right? It's just experience. If you look at the daily time frame, let me show you what I'm saying. Daily time frame is actually bearish. It changed structure to the downside, and then it has had this retracement up to this upside. Now, if you look at these candles, you know that there's not even one red candle there, and there's now a doji. It's just there is a possibility that price is going to reject off of this area because of it's already due for a retracement, right? On the 4-hour time frame, you see that price is stalling this area. Now, if you look closer, you see that price has found resistance around this area and is not strong enough to break it. If you look on the 1-hour time frame, which is the most cleanest, you can see that we have this rounding top. Usually it's just a shift of structure. So price has been bullish coming into this area, and then it now switch bearish. Now remember, this is not really sell and forget strategy. So if you are trading only sell and forget strategy, you should not be entering this pair, right? It's just something that kind of looks good, and I'm possibly not even going to enter this pair. I'm just showing you guys because it looks good enough. Euro JPY, not sell and forget again. We just have resistance, price is above, and we are supposed to be in on this engulfing, but price is already up here, so we just have to wait for maybe a retracement to buy. Don't focus your thoughts too much on Euro, NZD, USD, and Euro JPY just because it's not sell and forget. But if you are willing to take a risk, you can play it out, right? That's pretty much the pairs for the week. Now let me just cover how to draw area of interest like I explained initially, right? Now, area of interest is very simple. We only draw area of interest on the 4-hour sorry, on the daily and on the weekly, right? Area of interest is just basically support and resistance area on the daily and on the weekly time frame. Now let me explain how to draw area of interest. So in order to draw area of interest, you need to understand market structure first. So you need to read whether market is bullish or bearish. So if you read this market structure, like I taught in this video again, now that you have figured out that this market is actually bullish because price has been going up, and based on market structure, this is the higher high, and this is the higher low. This one right here, the higher low. You need to find your area of interest within this area. So the support and resistance area within this area, that's where you should be looking for area of interest. So this right here is how to draw area of interest, right? First of all, you go over to your area of interest time frames, which are the weekly and the daily. Now, personally, I prefer the daily time frame to draw area of interest just because they are more closer to my entry time frame, and they usually just look cleaner. Weekly time frame area of interest is stronger, but is on the far end to me, right? But that is the time frame we usually draw area of interest. So if I check the weekly, if there's no any form of clean area of interest or support and resistance I can use, I just dive down to the daily time frame to draw my area of interest. Now, first of all, you need to be able to read market structure. So for you to read market structure, you need to understand your higher highs and higher lows. So I'm assuming you know that part already. If you look at this market structure, you can see that this market is bullish because this is the high, this is the low, this is the higher low, and this right here is the higher high. So technically, this market is bullish, right? Because of this the higher high and this the higher low, right? But there's still information within this range right here. So we still need to understand what market is doing here, just because this is the daily time frame, right? This took a lot of time for market to form. So we still need to understand this market structure within here, right? So let's just read market structure and see what we get. So right here we can just tell the market is somehow bearish, but it's not really bearish just because this is the higher and higher low, right? But just assume that this is market structure apart from this, right? So market is bearish coming into here. So you just look for the lowest points or the highest point possible, right? To start marking your higher highs and higher lows from, right? So let me remove this area of interest so that we'll draw it together, right? So that we'll draw it together. So if this is the low, we need to look for a high for that. If this is the lower low, we need to look for a high for that. So this is the high of that low, right? Until price breaks above or below, market will change structure. So price broke above here. Price broke above this line right here, right? So this will not be the higher high, and we need to find a higher low for that, which is this right here. So price broke again above. This is now the new higher high, and this is now the new higher low for that. Price is still bullish, right? This week doesn't count. It's only body closure that counts, right? So price broke above again, as you can see clearly. This is now the new higher high, and this is now the new higher low, right? So we just keep doing it until we reach where current market price is. So price is now here having a new higher high, and this is now the new higher low, right? So now, as you can see that this candle right here now, it has actually broken above. But why am I not drawing the new higher high as that place? Is because that candle has not closed yet, right? That candle is not a real candle because it has not closed yet. Until it closed, that candle is still, is still forming, right? So now that we now have our new higher high and higher low, now that we now have a new higher and higher low, we need to draw our area of interest within this range. We need to find a lot of support and resistance that we can see within this range. Anything outside is not an area of interest. Anything outside is not area of interest. So now we'll just look for support and resistance that we can see that has the most touches within this range right here, right? Within this range right here, which is the higher high and higher low. So you just bring out this area of interest to start looking for support and resistance. So if I check down here, there is a support and resistance. You can see price rejected up, rejected down, Price came to the area of interest, rejected, but price is just at its low, right? We need the area of interest that is the most valid is the one that has the most taps. So this area of interest has how many taps? 1, 2, 3, 4 taps. If I come all the way here, this area of interest has how many taps? 1, 2, 3, 4 taps. So since both of the area of interest have 4 taps, we'll just choose the closest area of interest to current market price, because that is the most valid area of interest. That is the area of interest that price is likely to react from in time, right? So if price is coming, it's likely to react from the closest area of interest before it gets all the way down to any of this area of interest. And this area of interest is very clean. You can see clear rejections from area of interest, right? So that's how we draw area of interest. We just look for the higher low, and then look for the most support and resistance within that high and low, right? Anything above is not an area of interest, right? So that's how we draw area of interest. That's pretty much it on area of interest.